Hello guys, I'm Paris the Options Guy and welcome to the No BS Trading Podcast. This is episode number 28 and this week we are going to talk about how the inflation numbers the last week came out pretty bad, but still the Fed could cut interest rates in the coming week where they have the interest rate decision. And I'm going to talk about all of the consequences and all of the stuff that you need to look forward in the next week, which are definitely going to be moving the markets. And then we are also going to talk about the two new IPOs that are coming in our markets next week. Actually there are four, but we are going to talk about two of them in this episode, and then we are also going to talk about how the market can move, especially after the erratic movement that we saw on Friday in the Indian markets, and where are the Indian markets headed after that. And you also might have been confused after looking at that movement, but today I'm going to clarify if the markets are going to move up or move down from here. So this is going to be a very interesting episode, so do watch this episode till the end. But without any further delay, let's just start with the episode. So talking about first of all what happened in the previous week, we had the US CPI numbers and they didn't came out very good in my opinion, but the market did take them positively, and I'm going to talk about why they were not so good in my opinion. But let's first look at how exactly the numbers came. So on Wednesday we had the US CPI numbers. On a year over year basis they came out at 2.7%, which was in line with the expectations of the market, and the core CPI came out at 3.3%, which was also in line with the expectations of the market. But you have to understand that with this data, it is confirmed that for the last 2 months the CPI has been rising again. And if you remember, the Fed has cut rates by 75 basis points already. That means the effect of that rate cut will now start to come into the market, because of which inflation can even flare up more from here. But the market somehow took that data a bit positively, and this is also a bit, you can say, surprising to me, the way market reacted to the inflation data. But we can't really do anything about that. But with this data, it was then confirmed that the Fed is going to cut rates by 25 basis points next week. So the prediction markets, there are prediction markets where you can see what are the odds that the market is giving to some event. And in the prediction market, the odds of a 25 basis point rate cut next week rose to 98%. So basically the market now is completely sure almost that the Fed will cut rates by 25 basis point in the next week. And I'm going to talk about that in just a few seconds, as to why that is really a bad idea. But then on Thursday, we had the PPI data. Now, CPI data again came out in line with the expectations of the market. You can say, okay, you know what, it has come in line with the expectations, so not very bad thing, right? But PPI coming very higher, or a disastrous number. If you see on a YOY basis, PPI coming out at 3% with the expectations, when the expectations were 2.6%, and on a month over month basis, PPI coming out at 0.4% when the expectations were 0.2%. So PPI is basically producers price index. It is sort of like a, you can say, wholesale inflation data, the prices of wholesale goods in the market. And if you see, the data over here is clearly indicating that things can get out of hand very fast over here, but the Fed is still somehow cutting rates. And you have to ask yourself, are rate cuts really needed? Because if you look at the market, if you look at the economy, right, the economy is doesn't look like it is going to slow down, right? The GDP data is coming out well. There is no sort of an indication of slowdown, at least from the GDP data over here, right? And then you also have other parameters which are not showing very big slowdowns. Yes, the job market has started to slow down over here. If you see, job market, if you see the NFP data, it is slowing down a bit, and you can see lower job additions happening in the US market. But still there is no like a major slowdown which warrants a 75 basis point rate cut from September from the Fed. So the Fed now cutting 25 basis points more in the next week can definitely be a very bad idea. And I've talked about this in my previous episodes also over here, that the Fed really does not need any sort of rate cuts, right? be it the 25 basis point rate cut that we saw in the previous month or the 50 basis point rate cut that we saw in September, none of those rate cuts were needed, but the Fed still decided to go ahead and cut rates. Now this is indicating that the Fed maybe knows something that is going to happen, which is going to be very bad for the economy. And I've talked about many such reasons in my articles that I write on LinkedIn, and I'm going to link one of those articles in this in the description of this episode, where you can go and look at one of such major issues, why, because of because of which the Fed might be cutting rates even when there is no such reason to cut rates over here. And the reason that I'm talking about is the bank losses, because if you see, banks are sitting on $500 billion of treasury losses on the bonds that they bought, right? And if anything goes wrong over here, the banks will need to liquidate these bonds by selling them, and they will need to take a very hefty loss, which could lead to their bankruptcy also, basically, which could lead to a bank run, which can be very disastrous. And by disastrous, I can mean there can be a huge systematic failure in the whole financial system of the US, and the ripples will be felt throughout the world, because of which things can go wrong around the world, because of which the Fed might be trying to cut rates even when there is no need, right? There can also be very many other reasons also. And it is not just treasury losses that the banks are sitting on. You have to understand that there are many other losses in many other areas also. Like if you look at the CRE loans. Now what are CRE loans? CRE is commercial real estate loans. The loans that that the banks lend out on real estate buildings or real estate projects, right? In US, CRE, the commercial real estate sector is not doing very great at all. It is doing horrible, and banks are also sitting on huge losses even in that department, which they are keeping it as unrealized losses as of now. Now if the banks need to liquidate all of a sudden due to some sort of a bank run or any sort of need for liquidity, this will trigger a very big, event where the banks will need the banks might also go bust, basically. And I'm talking about big banks. One of them is Bank of America, which is in a very vulnerable position right now, and I've also talked about that in my articles. I will link all of those articles in the description, don't worry about that. But definitely read those articles, because they will tell you some very interesting things about what is happening in the US, which nobody is talking about. Very surprisingly, these very crucial things that nobody is really talking about. So do definitely check these articles in the description. But yes, that is it for the inflation numbers that we got from the previous week. And aside from that, nothing really happening except for one thing, and this is also a very important thing but for us, and that is a new RBI governor has been announced. Shakti Kanta Das's term has come to an end. RBI governor, the previous RBI governor, and the government of India announced a new RBI governor, and that is Sanjay Malhotra. Now he used to work with the Department of Finance for a long time, the Ministry of Finance or the Department of Finance, whatever you want to say. And he also is the MD and the chairman of REC Limited. You must have heard about the stock. So he's also the MD and the chairman of REC Limited. So he has been announced as the next RBI governor. Now you have to understand that there is not a lot of information as to how is his nature regarding the monetary policy. So is he hawkish or is he dovish? Like, does he prefer does he let things loose, or does he keep things tight like the previous RBI governor Shakti Kanta Das, right? In Shakti Kanta Das's term, we have not seen any sort of rate cuts as of now, because he didn't feel there was any sort of need for rate cuts, and inflation was also too high. But does Mr. Sanjay Malhotra also follow the same framework as Shakti Kanta Das or not? And the answer to that will be given to us, I think, in the next 2 months, in January and February, because in February we have the rate cut, the interest rate decision that RBI has, and before that also we will keep on getting some information, right? Maybe he might talk about some things in the economy and give us some hints as to what he is going to do next right? So do keep an eye out on anything that comes up, and if I also do get anything which is interesting to talk about, I will definitely share it with you on this article. But yes, that was it, and this is what happened in the previous week. Now let's move on to the things that are going to happen in the next week and the events that you should look forward to. Now talking about the events that are going to happen in the next week, which are going to be important and which you should look forward to. These are the events. Now on Tuesday, we have the retail sales data from the US, and it is expected that the retail sales will come out at 0.5%. Now, if the retail sales come out higher than expected, what this will mean is that the consumer is spending more. If the consumer is spending more, it will mean that the inflation can continue to rise in the coming months, and this will mean that it will be even more harder to control inflation if the Fed continues with its rate cuts over here. So what this can lead to is a stagflation. Now, what is stagflation? It is a economic phenomena where there is no economic growth, but at the same time there is high inflation. Now, economic growth and inflation go hand to hand most of the times. Okay, so if there is high economic growth, there is also high inflation. But sometimes what happens is that economic growth slows down whereas inflation continues to move higher, and this is known as stagflation. So with the Fed going in a direction, there are chances definitely of a stagflation also happening in the US economy very easily. Now, I'm going to talk about stagflation also once we get more concrete evidence that we are going to head in that way. But this is something of a early possibility of happening in the US. Okay, now that is it for the retail sales data. Please do look out for the retail sales data. If the retail sales data comes out much higher than expected, you will actually see market reacting negatively also. There is no you can say, no doubt that the markets can also react negatively even if we get higher retail sales data. Now you might think that the retail sales data, if it comes out higher, it is a good thing for the market, right? But actually in reality, if retail sales data comes out higher than expected, the market participants could also expect that inflation will continue to rise, and because of that you will also see a bit of a negative reaction coming in the market. But yes, look at the retail sales data, and then on Wednesday we have the interest rate decision. Now the FOMC, the Fed, basically FOMC is Federal Open Market Committee, which decides the interest rate and stuff. It is expected that they will cut the interest rates by 25 basis points. Okay, now as I said in just a few minutes ago also, that it is completely unnecessary to cut rates at this point with increasing inflation if and all that stuff. It is just not necessary to cut interest rates. In fact, I have one more interesting point to share with you, is that since the last 7 months, in the 6 months, like in the last 6 out of the 7 months, PPI data has been revised higher. That means the initial PPI reading that the market got, it was revised higher the next month, right? And it again indicates that inflation is not going down. Inflation is still high and we are cutting rates too fast, right? So again, as I said that a 25 basis point cut is not really necessary. But if that happens, I think markets can also react negatively in the aftermath of the rate cut. Now, what do I mean by that is that rate cuts will come out at 12:30 a.m. Indian Standard Time. Okay. Now the US time I don't know, but rate cuts will come out at 12:30 a.m. Indian Standard Time. Okay. Now what can happen is that markets might move up a little bit on the announcement on the outcome of the event, right? But after that the markets can continue to move down from there. And one more thing you need to keep in mind is that after the rate cut, this rate cut decision comes out and all that stuff, there will also be a press conference from with Jerome Powell, and he will answer questions. Do read that because it will be very important, because some people might ask very good questions as to pointing out to higher inflation, looking at the CPI and the core CPI and all that stuff. And you will need to look at that and understand what is the outlook of Fed. If the Fed itself is saying that we are worried about inflation, and then they cut 25 basis points point, they do a 25 basis point rate cut, that will be really bad and the markets can react very negatively over there. So I hope you guys understand that. So these are the things that you need to look out for in the next week. Now let's move on to the IPOs that are coming in our markets next week and if you should apply to them or not. Now talking about the IPOs that are coming in our markets next week, we have actually 4 IPOs that are open in our markets next week, but out of them 2 have already started this week itself or in the previous week itself, which are Inventurus Knowledge Solutions and International Gemmological Institute, and they are going to close on Monday and Tuesday of this week. But as I said that you still have time, so we can review those IPOs and you can make your decision still. And then we have 2 new IPOs which are going to open this week, which are going to be Mamta Machinery and Trans Rail Lighting, and both of them are going to open on December 19th. Okay, so these 2 IPOs, Mamta Machinery and Trans Rail Lighting, we are going to talk about them in the next week's episode because they will still be open in the week after this for application. So let's keep this part short and talk about the 2 IPOs only, which are Inventurus Knowledge Solutions and International Gemmological Institute. So let's first talk about Inventurus Knowledge Solutions. So should you apply to this IPO for listing gains? First of all, the answer to that is no, because the listing gains as of now is just 28. The gray market premium as of now is just 28%, which means the expectations are that the listing gains will be around 28%. Now what is my rule of thumb is that at least look out for 40% gray market premium and only then go ahead and take the risk, because many times what happens is that you will see listing gains like this 25%, 20%, 28%, whatever, and then the IPO opens like flat, right? So we don't want that to happen, and that's why we this rule of thumb is very useful. Only apply to IPOs for listing gains which have gray market premium of 40% or higher. So if on Monday the gray market premium goes up till 40%, then you can think about investing in this IPO, but until then it is better to stay away only for listing gains. But should you apply to this company or should you apply to this IPO for investment purposes? Should you apply to this IPO for investment purposes? The answer to that is, let's look at it. So first of all, let's talk about what the company does. Now this company provides administrative services to healthcare enterprises. Now what are these administrative services? There are many things, like let's say handling paperwork of their clients or their customers, right? So let's say in hospital a new patient comes in and then they have a lot of paperwork, right? Maybe it might be the insurance claims and stuff, it might be the billing and stuff, it might be the discharge papers and all that stuff, and you get the point, right? There is a lot of paperwork, and so these guys do the handling of that paperwork. They also do documentation management, they give clinical support, so virtual medical scribing and all that stuff, right? So these guys basically provide the technology to the healthcare enterprises to enable to do all of these things, so they can be enabled to do all of these things, right? So I hope you guys understand what they do. Now in a broad based sense, I hope you guys understand what they do. So the company is good because when you are providing technology to basically you are digitalizing a lot of things, it is definitely a good thing. And and this provides, when you digitalize or when you use technology in your business, most of the times it provides with higher efficiency, and your business just runs better, right? So the company definitely has a very big market that it can capture into, because it actually operates in US, Canada and Australia mainly. It is not into India. And in US especially, let's just talk about US, let's leave Canada and Australia. The US itself is such a big market, because if you see the medical market in US, it is such a big market, and there is so much money in it that it is very easy to expand in that market if you have a very good USP that people want. So definitely, in my opinion, the company has a very good market that it can apply to. That it can capture. So let's talk about how the company has been actually doing in terms of revenues and net profit, right? So if you see the revenues in FY22, the revenues were 784 crores. In FY23, they jumped to 1060 crores, and in FY24, they jumped to 1857 crores, right? So very good jump in the revenues over here in the last 3 financial years. And by looking at the first half of the FY25 numbers, the revenue looks like it is going to be at 2400 crores in the next year, in the next financial year. So definitely a very good growth in the revenues, in the growth of the company. And as I said, the market is very big to capture. If the company can do it very successfully, I think the potential for growth is very high over here. And then in the profit after tax segment also, if you see, profit after tax in FY22 was 232 crores. It jumped to 305 crores in 2023, and it jumped to 370 crores in 2024. Now, this is a bit of a disappointing thing in my opinion, that the profit margins are not increasing as fast, right? Now, you would expect that the company would get more efficient and the profit margins would increase over time, but that is not happening as of now over here. So this is a bit of a con, but still not really a very bad thing. One good thing is that the company doesn't has any sort of debt, so this is again a very good thing. But then you would then you would ask me, okay, so what are they going to do with the IPO money, right? They are raising 2497 crores. What are they going to do with it? So the answer is that they are not going to get any of that, because the promoters are selling their stake, and so the promoters are the only ones who are going to get the money. No money is going to go into the company, which is again a bit of a bad thing. But again, if the company doesn't need any money, why infuse more capital for no reason, right? So I hope you guys understand that. So should you apply to this IPO? In my opinion, you should definitely apply to this IPO, especially if you're very bullish on the healthcare sector, right? The IPO this company will give you a bit of a unique exposure into the healthcare sector. And in my opinion, because of this, the company is a good, you can say, bet for the future of the healthcare industry itself. Okay. And it also has a bit of it also operates in a bit of a niche, you can say, market, right? Because if you see, operating in healthcare is one thing, but operating in administrative works of healthcare companies is another thing. And because of this, if you need to enter into in this market also, you need to learn a lot before doing that. So any competitor who wants to enter into the market, they will take a bit of a time, and they will even take more time to understand what is happening, how things work and all that stuff. So even um, you know disruption in this type of industry is also pretty hard. Now, I'm not saying it is not possible, but it is pretty hard. But that is also the case with almost many other industries also. So in my opinion, definitely you should think about applying, but only thing that you should keep in mind is that you should be able to check your investments and what is happening in the company from time to time. It is not a company which you just buy and just keep it for 10 years or something. You have to keep a bit of an eye and look out for what is exactly happening in the sector and space, and just be updated with what is happening. So that is it for inventurus knowledge solutions. Now talking about IGI, International Gemmological Institute. Okay, and this is a 4200 crore IPO, out of which 1475 crores will go to the company, and 2750 crores will go to the promoters who are selling their stake. Okay, so the IPO, as I said, has already opened, will close on December 17th, so you still have 2 days to apply for the IPO, so no problem in that. But should you apply to this IPO from the gray market premium perspective? And the answer as of now is no, because the gray market premium is first of all fluctuating a lot, and then it is also at just 25%. So if somehow the gray market premium jumps to 40% by the end date, then you can think about applying to this IPO, or else just stay clear and don't apply to this IPO for listing gains only, okay? But should you apply to this should you invest in this company? And so let's first of all look at what this company does. So IGI is International Gemmological Institute, okay, of India. It is a globally recognized organization which certifies and grades diamonds and other jewelry, gemstones and all that stuff, right? So it basically is in the business of certifying and grading, not in the making of diamonds, jewelry and all that stuff. So I hope we understand that distinction over there, right? So they are actually in a bit of a niche area over here, because there are not a lot of players who do this type of certification and grading and all that stuff. And so because of this, it is a very good thing that the company is in a bit of a niche area, because once you have a hold in a niche sector like this, disrupting it again, as I said, is pretty hard. And so that is one good thing. Another thing is that the company has very good net profit margins, and I'm going to talk about that right now, because if you see the revenues in FY21, okay, now sorry, in FY22, I'm really sorry. Revenues in FY22 were 374 crores. In FY22 itself, the profit after tax was 171 crores. So almost, you can say, almost 50% profit margins over here, right? In FY22, the revenue jumped to 499 crores, whereas the profit after tax jumped to 241 crores. In FY24, the revenue jumped to 648 crores, and the profit after tax jumped to 324 crores. So stable 50% profit margins, right? And so what does the company does with so much money, right? Because they don't need expansion, right? They don't need they don't have the need for expansion, right? Because you don't require huge factories or something to grade diamonds. So what the company does is that it pays a lot of dividends, right? And you will see that going forward also, when the company is listed, that you will get a lot of dividends from the company, which is again a good thing, okay? So keep that in mind over here, right? Now let's talk about what should you apply to this IPO or not? And the answer is yes, you should definitely apply to this IPO. The thing with this industry is itself, right? The jewelry industry, be it diamonds and all that stuff, is that it is a luxury industry, right? You don't see people in the middle class buying diamonds, okay? No offense, but you don't see them, right? You see rich people buying diamonds and jewelry and all that stuff, and they don't face a recession. In simple terms, when the market goes down, when the economy starts to slow down, the highest class of people, the rich people, they don't face a lot of problems, right? They don't face as much problems as the middle class or the other classes, right? Because um, when you have a lot of money, you have many different sources of income also, and so they don't face a lot of problems, because of which they continue to spend on many different things. And a lot of, by many different things, you also would have guessed by now, jewelry and gems and diamonds and all that stuff. So that the the luxury class of people, or the highest class of people, are very resilient in their spending, right? So because of this, this industry is sort of an evergreen industry, okay? And because of this, the company's business is also sort of evergreen. So in my opinion, definitely you should think about applying to this IPO. It is definitely a very good long term bet, and I think you can also see a very good considerable growth on a constant basis in, with the company's revenues and the net profits. And you also will get a good amount of dividends from the company, because a lot of excess revenues of the company, or the profits of the company, will need to be distributed out. Keeping it with the company just does not make sense. So I hope you guys understand. Definitely apply if you want to invest in this company for the long term. A very good bet, especially given the fact that diamonds are also increasing in popularity throughout the world. So that is it for the IPOs this week. Now we are going to talk about the other two IPOs in the next week's episode. But yeah, that was it for the IPOs. Now let's move on to the market analysis for the next week. Now talking about the market analysis for the next week, if you see over here, Bank Nifty pretty much flat and Nifty also flat, right? And as I said, the markets can consolidate for a few days over here if they need to move up. But on Friday, if you see over here, there was extreme volatility. Nifty moved, and I'm gonna go into that in detail in just a second. But yes, in on Friday, except for Friday, the market pretty much consolidate in the last week, both Bank Nifty and Nifty. And as I said also, that we might see a bit of a consolidation over there if the market doesn't move down very fast, and then we can see an up move from here. Okay, so except for Friday, there was pretty much a consolidation. And on Friday, if you see over here, the markets went down a lot in the first half of the day, right? Over here, if you see, just a second, okay. Over here, if you see, Bank Nifty moving down 1.7% over here, 1.7%. You have to understand that that is a very big movement, right? And then even the bigger recovery over here, just a second, not that. Yeah, even bigger recovery of 2.6%, right? So extreme volatility in the market, especially after the options are gone. Before options, you would see these types of moves, yes, but this is happening even more after the options are gone. So this is one of the effects of changes in the regulations, right? Now since options are gone, the number of option sellers have decreased in the market, because of which what you are seeing is that markets are more free now, because the more number of option sellers there are in the market, the more the market is sort of confined, right? Or the less the market moves. But this is also the case, the opposite is also the case, that the lesser number of option sellers there are in the market, the market moves, market can move more, and the market is more free. So if you see over here, Bank Nifty moving down so much and then recovering so much. At the same time, Nifty also, if you see, just doing a lot of aerobatics over here, right? Moving down 1.5% over here. And then moving up also over here 2.5%. So just a lot of volatility that is coming in the market over here. But what this move is indicating, that Nifty and Bank Nifty, especially Bank Nifty, might be ready for a new all-time high over here. And why am I saying that? Because it looks like Bank Nifty trapped a lot of sellers and now is going to start to move up over here. Because if you see over here, the markets if you see over here, a lot of sellers or a buyers had kept their stop losses over here. So the market took everybody's stop loss over here and now is starting to move up. And in Nifty, it is even more pronounced, where a lot of buyers had kept their stop losses over here. And now Nifty has, went below those stop losses, took everybody's stop loss, and now is starting to move up. So both Nifty and Bank Nifty look like they are going to continue their up move over here. And why do I say so? Is because today the market had a really good chance to close bearish, especially after this huge down move that we saw in the first half of the day itself. The market really had a good chance to move down from here, but the markets did not move down from here. And this means that the markets do not want to move down, because if the market has to really sell off, it will not show you such like a lot of volatility. It will move down in one instance. So from here, the markets can very well move up, and Bank Nifty can probably hit 55,000 very easily. And this move can continue in the next week itself, starting from Monday onwards. No problem in that. And in Nifty, we can easily see 25,200 in the charts. Okay, for Nifty, yes, things are not as bullish as Bank Nifty, but still Nifty is also looking pretty bullish, and 25,200 can be an easy target over here for Nifty to achieve over here. Okay, so both Nifty and Bank Nifty looking bullish. But what one thing that you need to keep in mind is that on Wednesday we have the US interest rate decision, because of which, as we approach the interest rate decision, things might cool down a bit. So we will probably see a good move in the coming in the first 2 days of the week. So what do you need to do on Monday? Very simple. Now chances are that market might open with a good gap up over here, somewhere near 53,800 also easily, because the US markets are a bit bullish over here. Yes, Dow Jones is moving down, but if you see Nasdaq, S&P, they are not as bearish as Dow Jones, right? So If the markets open with a gap up over here, what you need to do is look for any sort of a pullback near 53,600. Okay, 53,600 to 500 will be a very good zone to take a long position again from here, with the first target of 54,000, which will be an intraday target. But on a positional basis, you can easily keep a target of 55,000. This target might also come very fast. It might come on Monday, might not come on Monday itself, but from Tuesday, on Tuesday also, like in the next 2 days also, the chances of 55,000 coming is also pretty easy. Okay, it is not really a big deal for bank nifty to move 1,000 points even in a single day. As you must have seen, market moved up 1,500, 1,300, 1,400 points itself in one day. So moving up thousand, another 1,000 points is not really a big deal at all. If the markets open with a slight gap down, let's say somewhere near 53,400, 53,300 and all these levels, the best place to take a long position will be between 53,200 to 53,100. Okay, this area will again act as a very good support, and markets can take support from here and start to move up. And if you take a long position over there, you can keep a small target of 53,500 itself on an intraday basis, but on a positional basis, again you can keep a target of 55,000 on the upside. Where will the markets become negative is very simple. Now the markets will only become negative if we close below this wick over here that you see. Okay, until unless we don't get a closing below this wick, right? And as I said in the previous week's analysis also, that we need a closing below this level. Okay, and that will confirm a fake breakout. But we didn't get a closing. The markets did try to break this support over here on an intraday basis, but if you see extreme very fast recovery coming from that support zone itself, so it is indicating that the markets will start to move up. Now, as I said, where will markets become negative? Only below this level. Until then, the markets may even continue to consolidate, but they will not become negative. The markets may also be volatile, but they will not become negative until that level is broken. Now, talking about Nifty over here. Nifty, if you see, also is looking pretty sweet over here. And if we go into the 15-minute chart and look, where exactly should you take a long position and a short position? So the place where you can go ahead and take a long position in a dip will be 24,600 to 24,650. In this 50-point range, if let's say somehow Nifty opens with a slight gap down, let's say somewhere near 24,700 and all that stuff, you can easily take a long position in that area with a target, small target, or the first target of 24,800, and then the second target of 25,000. Now 24,800 might come easily on an intraday basis, but 25,000 is a hit or miss. It might or might not come on an intraday basis, but you still can keep that target, because even 25,000 is not really that far for Nifty over here. Okay, so on a positional basis, your target can easily be at 25,200. This can easily come in the next week itself, in the first 2 days also. Not a big deal for Nifty over here. If you open with a gap down, let's say somewhere near 24,850, 24,900, wait for a little bit of pullback till 24,800, and near 24,800 to 700, in this 100-point range, wherever you see that the market is taking good support, you guys can go ahead and take a long position over here. Wait for a little bit of price action over here, or a little bit of a, you can say, a positive price action to be built, and then you guys can go ahead and take a long position over here till the target of 25,000 on the upside on an intraday basis, and then on a positional basis till the target of 25,200. Where will we become negative? Again, only below this low of 24,200. And again, our level of 24,300 was again defended this week also. Yes, on an intraday basis, the markets did try to break, but we saw extreme buying coming, so we cannot really consider it as broken. So the level that needs to be watched out is 24,200. Below that only is where we will see real negativity coming in the market. Until then, we will not see a lot of negativity that will come in the market. So I hope you guys understand. But yeah, that was it for the market analysis. It looks like markets will give you another up move in the first 2 to 3 days itself of the week, and then we might slow down for a day or two, and near the closing of the week we might get again a little bit of momentum, depending on how the market is on Thursday. Okay, so I hope you guys understand the market analysis for the next week. So yeah guys, that was it for this week, and thank you very much for watching till the end. I really appreciate that you stayed till the end and watched the whole episode. But if you liked something from this episode, if you learned something new from this episode, do consider following my channel or wherever you're listening, and do consider even listening to more of my content and reading my articles, because they will be very helpful for you to understand a lot of things that are not covered by the mainstream media. But anyways, if you have any sort of suggestions for the podcast, for anything that you want added to the podcast, or anything that you want changed, do let me know in the comments, and I will make sure that I try to change those things, right? But anyways, I will see you guys in another episode in another week. Bye bye.